I wouldn't say there are specific risks that as an investor you need to look out for, but I will bring it in another perspective, or rather from the objectives perspective. Because when you're going to make an investment, you first need to have an objective for that investment. We have about 4 objectives that as an investor you need to have. That is 1, capital preservation, 2, capital growth, 3, current income, and the other one is speculation, which I don't want to dwell much into that because that is not an investment per se, but rather taking advantage of any opportunities that are available and getting out. For capital preservation, that means you need to preserve your capital. That is, you don't want to get into risk assets and you don't want to outlive your income. So for capital preservation, what happens is mostly used by people in heading towards retirement. Assets invested in capital preservation objective are basically the short-term interest earning assets. When you look at capital growth, basically you want to grow your capital. So when you want to grow your capital, that means you have a long-term investment horizon, and that basically goes to the young people who still have a long way before reaching retirement, or as up to when they are not able to generate a lot of income. So here you're investing in assets that I can say they're a bit risky, but you're also able to reinvest the returns that get in those investments. So there's an element of compounding in that. For current income, that means you're investing in assets that will give you income regularly. So basically you'll be looking at high yielding rentals, you'll be looking at stocks that giving you high dividends. So going back to the risks that you need to look at, you need to put yourself in a position of whether you are capable of taking the assets that are available in those investment segments. So what you need to do as an individual and as an investor, you need to first ascertain your financial position by either putting in place or trying to know your expenses, the assets that you have and the debt that you have. That will give you the position you're in and your ability to accommodate risks in the assets that you are going to take.
So growth assets are characterized by high risk, but at the same time there's possibility of high return. They run between the medium term and the long term. And then capital preserving assets, they have low risk. You earn a continuous stream of income from them, and they mostly run in the short term. Then the next thing you need to do is to find a balance between your investments so that now you neutralize the risk exposed by your investment. Then you also need to consider your liquidity needs. By this I mean you need to look at your immediate needs and any intermediate needs and future needs. And then now as you invest, you need to consider these things as you're making your investment decisions. And guys, let's remember we're still in the middle of the pandemic and we need to observe all protocols set by the Ministry of Health. That is to wash your hands regularly with soap or to sanitize with an alcohol-based sanitizer. Keep your social distance and always remember to wear your mask while in public places.
And we'll never let you down. CIC Insurance Group. We keep our word.